Happy day, everybody, and welcome back to the show. Glad to be back in the studio today with my good friend David Solis, and I'm excited to hear about what he's been up to these last several years as far as his financial planning business or his wealth building business. In his honor, I'm wearing my burnt orange because David actually played football for UT, so I wanted to bring that up because we both went to UT. I was class of 81, you're 86 or 7?
86.
86. Yeah. And I know we want to talk about your business, but we could also talk about football too.
Gosh, that was so long ago. Most I know about that now is how my body feels.
Well, I know you go to the games though. I see you on
yeah.
Facebook, cheering them on. So go Horns.
Yeah,
but
that's right.
let's do a little introduction about who you are, where you're from, and your business model, and what we're going to hear to talk about today, because I'm excited about this.
Yeah. Well, thank you, Mark. Thanks for having me. Like you said, my name's David Solis. And I grew up in South Texas, small town, Falfurrias. Grew up in a family of educators and lived there for the first 18 years of my life, and then moved here. And I think I'm an Austinite now. I've been here way longer than 18
most people.
years. Yeah. Did my undergrad here, got a business degree. Then went off in the Marine Corps for a few years. And after that, I was trying to decide what I wanted to do, moved a couple of different places, and finally decided I wanted to come back and plant roots here. And I've been here. I got here back in, in 92, I went to grad school from 92, 94. Okay. Then I explored, but I came back.
MBA?
What's that?
MBA?
No, I got a master's in education.
Oh, cool.
With a specialization in sports management. I coached high school football for many years. And
that's cool.
Yeah, it was cool. I did it in the public schools for a while, and then I did it in the private school. And the great thing about the private school is I didn't have to work there full time. So I started my own gig.
I got it.
And I started doing my financial business back in 1999.
Okay. So 25 years or so.
Yeah. Quarter of a century, seen a lot. Grown a lot. I specialize in working with educators, but I'll work with anyone who's serious about their money. Typically, I like to work with people that are married, happily married, with children, and serious about their money. But if people are serious about their money, that's my number one qualification.
Now, I'm way beyond the child rearing years personally, so I still want to talk to you about my own situation for sure.
Yeah, sure. And my specialty is the distribution side of the house.
Yeah.
When people go into retirement, oftentimes people don't know how to convert their assets into retirement income that will last them for their lifetime, help them keep up with inflation, and then also possibly leave behind what they want to leave behind.
Right. Legacy.
Right. The wealth distribution side is quite a bit more complicated than the accumulation side. The accumulation side is kind of easy. But so that's where my specialty lies.
And before the show, you shared a term that I've never heard before, but I love it. It's called the circle of wealth. And you defined it as 3, if you will, buckets. Is that correct?
Yeah. Well, if you think of a circle, everyone's got a circle of wealth. And I learned this from Don Blanton, who he himself was an educator at one time.
Okay.
He's a great guy. And he came up with this concept that's terrific. So if everyone has their own circle of wealth, and everyone is trying to grow their circle of wealth. And
maybe not everyone, but most. If you're serious about
people
your
that are serious about their money.
I love that serious about your money term too.
There you go.
I'm serious about spending it half the time.
Well, that's part of it. Money is to spend.
Yeah.
It's just it's something to spend to improve our lives and improve the lives of others. And I just want to make sure that you optimize your ability to spend. That 100%. But most people and most advisors focus on 2 areas, 2 slices of the pie, so to speak, of that circle. And those are accumulated wealth. That's the money you've saved up, whether it's in CDs or stocks or bonds or mutual funds or annuities, cash value life insurance, whatever. That's your accumulated wealth.
Right.
Then there's your lifestyle wealth. That's the money you spend on your current lifestyle. The house you live in, the cars you drive, the vacations you take, just your lifestyle. And a lot of people just see those 2 areas. And I don't really focus on those as much as I do a third piece of the pie, which I call transferred wealth. And I think that's a huge key. And it's very different than what most people do. And that's why my practice is kind of specialized is I teach people, I train them how to have the eyes to see transferred wealth. And what I mean by transferred wealth is not like what I first thought of it. I thought, oh, that's the money you're going to transfer to your heirs, to your beneficiaries.
Right.
No. Transferred wealth is the money you're transferring unknowingly and unnecessarily on a month-to-month basis to banks, to credit card companies, to the universities where you send your children, to the companies that are holding your retirement accounts, to the mortgage companies that are financing your house. So there's 5 main areas, and that was it. I covered them. How you pay your taxes, how you pay your mortgage, how you make your major capital purchases, how you put your kids through college. Those are some main areas that you may be transferring wealth that you don't know, whether it's fees or taxation. You're losing where you could be gaining on arbitrage. There's several different areas, and until you're trained, you're not going to see them, and money's going to be escaping your personal economy.
Yeah.
So I show people how to be more efficient with their accumulated money and with their lifestyle money.
Okay.
And then we bring that new money we've identified to transferred wealth. And instead of transferring it away, we bring it back into their personal economy.
Okay.
And then they decide where they want to save it. And that's when we have the discussions about, well, where's the best place to put it?
Yeah.
We'll take a look at everything.
Is that budgeting in the truest sense, or is it it's bigger than just that?
Yeah, it goes a little bit deeper than budgeting.
Okay.
I'm not going to call people and tell them how much to spend on coffee, how much to spend on vacations.
Yeah, cut out Starbucks every day. Nothing like that.
Yeah, no. Those are all personal decisions, and because there's a big key is, well, my number one goal to get someone to retirement, when we get to retirement, is I want them to be able to walk out the door and, if possible, maintain the same lifestyle from the day they retire throughout life expectancy. Okay. And tell me again, what we were talking about budgeting, right?
Yeah, you were talking about transfer of wealth, and I was, you were trying to find unhidden areas maybe where people are spending money or giving away money, if you will.
So that's my number one goal. But so in order to do that, I find the transferred wealth, and then we also learn about distribution, the distribution side of the house. So the budgeting is kind of just that's a topic that I'm not going to tell people how to live their lives.
Sure.
If I called you and said, hey, I've been looking at your finances and I think you should stop doing this, you're not going to return my call. So we go way beyond that, because
no more steak.
I know what it was. I want to show you how to have the money to last throughout life expectancy. But the other thing is, you need to be able to enjoy the journey along the way, along to retirement and through retirement. So budgeting is, I'm not going to infringe on your lifestyle.
And I appreciate that too. Because my wife talks about budgeting, and I shut down.
There you go.
But so tell us more about this circle of wealth and these different buckets. I mean, obviously, people who have jobs, that's part of their accumulation, if you will. But what else is there involved?
One of the things
at macro level, then we break it down.
Okay. Well, one of the things that's involved is just getting back to the fundamentals. In some ways, I think our grandparents and great grandparents probably had it more figured out than we do, because they had a lot less options.
Right.
Today, gosh, you can't open a magazine, pass by a billboard, listen to a radio station with everybody just throwing information at you.
Yeah.
There's just so information that you get bogged down.
Especially the internet.
Right.
Facebook and everything else.
Right. And it's like you see one dog and pony show after another, and gosh, who's right? And it's so overwhelming that it causes a lot of people just to freeze.
Yeah.
So we just really get down to the basics. Like, one of the core concepts that everyone should be aware of and take a look at is something that we talked about briefly before the show, is human life economic value. What is your human life economic value? Everybody has that. And the ones that are experts at figuring that out are the actuaries that work for life insurance companies.
Yeah.
And that's based upon your age, your health, your occupation, your education.
That's right.
They're experts at that. And like we mentioned, there's a great movie. I don't remember the title of it, but it was made after the 9/11 disaster, where these companies had to come in and they had to calculate the human life economic value for every soul that was lost.
Either the janitor in the building or the CEO.
Yeah. And the reason that's important is that goes to another question that you asked me is, well, when it comes to life insurance, which is kind of like the foundation of a lot of financial planning, is how much life insurance should I have? Well, my answer to that is simple: as much as a life insurance company will sell you.
Right.
And what I mean by that is they calculate your human life economic value.
Yeah.
And once you understand that concept, why would you ever want to insure yourself for less than your human life economic value?
Great point.
Yeah. Now, it doesn't mean that you have to shell out the expense of buying a permanent policy for that.
Yeah.
You could get an expensive term policy, some permanent, a blend of both. So
Yeah.
those are all the finer nuts and bolts. But that's one of the core concepts that that's one of the core discussions we need to have. And then also just the core discussion of the wealth accumulation side of the house, your working years. That's kind of the easy part. Now you want to save or invest with intention, and the intention is, how much do you need in order to live the lifestyle you want to live in retirement, the distribution years.
Right.
So we got to kind of separate those two things and understand all the factors that play a part in both of those.
Yeah.
And then right in the middle is what I call the red zone. The 5 years before retirement and the 5 years into retirement, those 10 years, that's a very, very critical time. And what I mean by that is you cannot afford major losses during that time, because it'll kind of mess up your whole plan.
Yeah. And that's kind of where I am now.
Right.
I'm 64.
Right.
And
the way you do that is you just, again, another core concept is you have your, when it talks to products, where do I put my money? Do I put it in gold? Do I put it in real estate? Do I put it in the market? Do I put it in insurance products? Well, let's look at two main areas. There's probability-based outcomes, where you might get this, you might get that.
Right.
You don't know. It's probability-based. Now, here's an average, but averages don't tell the whole story. When you look at averages, there's some huge losses in there and some huge gains.
Yeah. Yeah.
And there's some flat areas. So that's your probability-based outcome. And then you have your guaranteed-based outcomes. The products that life insurance companies offers, whether it's annuities or life insurance.
Yeah.
Because
whole life or universal life.
It could be whole life. It could be universal life. Yeah. There's a whole different range of products, and you don't want to get into the, we don't have time to get into the weeds of all those, but all of them are good, but it's increasing your knowledge base just a little bit and understand how they work. Because all of them can work in a system as long as they're bought for the right purpose with intention.
Mm-hmm.
So
and when you say intention, you mean with a goal in mind?
Right. With the goal in mind, because some people, when I meet some people and they're saving, and I say, well, show me what you got. They don't even know. Hey, what is this for? I don't know. What is this for? I don't know. They don't. Every single place you're putting your money has to have an intention. Is it a hedge against inflation? Is it for a guaranteed distribution? When you get into retirement, this other expert that's great, guy named Tom Hegna, who I've studied with, he talks about having paychecks and playchecks when you get into retirement.
I like that.
Your paychecks you got to have paychecks that cover all your monthly expenses.
Yeah.
And then you want to have some playchecks.
Sure, travel or
exactly
whatever.
All those things,
games.
Yeah.
Whatever you want to do.
Entertainment, all those things that people talk about that they want to do in retirement.
Yeah.
Oftentimes people say, tell me what your retirement's going to look like. And they give me all these things they want to do. And then they get into retirement and they don't do those things. And the reason they don't do them, they're living what he calls a just in case retirement. Well, just in case someone gets sick or we need this. You got to plan for all those things.
Yeah.
And if you plan for all those things, you won't have a just in case retirement. You'll have the retirement that you want.
Yeah. 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 I do want to touch on life insurance a little bit today. For personal reasons, I want to explore it more for me and my wife, but also you mentioned a foundation for financial planning, I guess, and let's talk about the value of that and some of the nuances of life insurance these days versus maybe 30 years ago or so.
Yeah.
Because when I was a young man, there's a guy named A.L. Williams who came on the scene and says you'd want to just buy term insurance and invest the difference. And now, and that was sort of the philosophy of a lot of people back then.
Right.
Right. But things have changed and products have changed and benefits. I say benefits have changed. I mean, they haven't changed per se, but I want to know more about that.
Yeah.
Personally.
Yeah. That buy term, invest the difference. That's probably one of the greatest marketing ploys of all time.
Yeah.
It really was.
Made him a wealthy man.
Yeah. And yeah. And now let me tell you, just so you'll know, term insurance, the reason it's very inexpensive to own term insurance is it's just death benefit that you're buying.
Sure.
And it's for a known amount of time, 10 years, 15 years, 20 years. Now understand that the insurance companies don't insure everybody. You know, if someone has a drug problem or too many speeding tickets or bankruptcies, all they won't, they're not insurable.
Just deny you.
So they're very specific on who they'll insure. In fact, they're so specific, these actuaries figured out that for term insurance, it's like 98% profit to these companies. In other words, they know you're not going to die in that 10-year period or 15-year period.
Or
so
very unlikely.
Right. So it's all profit to them.
Right. They're very smart people.
Oh, absolutely. Actuaries are some of the most brilliant. And that's why I say, now we can use that to our advantage, math and science. That's how we figure out a retirement and using some of these guaranteed-based outcomes. But life insurance is kind of like a Swiss Army knife. It can cover a multitude. You know, if you're a businessman, a buy-sell agreement. In other words, you have a business partner and you may not get along with their spouse. And if your partner dies, you don't want to be in business with them. Buy-sell agreements. At its basic core level, you want to protect your loved ones. If you have a family, if death actually does happen, well, you want to be able to make sure that you replace
taking care of, pay out the mortgage or whatever.
Correct.
Things like that. And
then a lot of people in real estate, some are aware of it. I know because some use it, but a lot of people aren't. There's in permanent life insurance, you have cash value buildup where you can build up cash value. And I learned a system a long time ago where some people were using that to finance their real estate. They build up their own cash value, and rather than go to a bank, they, in essence, become their own banker.
Yeah, be your own bank.
Right. There's a system out there that you can find called the infinite banking system.
Okay.
And that uses whole life specifically, and it's a great system. Life insurance.
Where your death benefit is a little bit lower, but you maximize your cash value.
Correct. One of the keys to the infinite banking system or key to using the cash value of life insurance as a retirement income vehicle is you buy the product in a very specific way. You buy the least amount of death benefit possible and grow the cash value to the maximum amount possible and still keep it a life insurance product.
Right.
And there's IRS regulations around that. But that's another tremendous benefit of life insurance is you can use the cash value as a way to access distributions and get tax-free income in retirement.
Yeah.
The great author and named David McKnight, he wrote a book called Power of Zero.
Okay.
And what he teaches people how to do, and it's a brilliant concept, is save money in permanent life insurance policy. And when you retire, all your retirement income, or a good portion of it, is tax-free. And if you can make sure that your other retirement income does not surpass your the exclusions for Social Security and uses the exemptions to not go above what's taxable. We all have an amount of income that isn't taxed every year, your personal exemptions.
Sure.
Whether you're individual or married filing.
Sure.
But if you keep your taxable income under that amount, everything's tax-free. If you're under your exemption, well, all that's tax-free. And then if all your other retirement income comes tax-free from life insurance, and a term called provisional income is underneath certain limits for a married couple, then your Social Security is not even taxed.
Wow.
So it's tax-free, tax-free, tax-free.
Yeah, that's wonderful.
Yeah.
You keep the IRS out of your pocket for sure.
I don't even think you have to file a tax return in that case. You have no income. You're completely off the radar for IRS income tax.
That's wonderful.
Yeah.
We've only got a few minutes really, but I want to make sure people know how to get a hold of you, because you've got some information that people just don't probably understand. Really, you've got knowledge that they may want to reach out to you and say, "Here's my situation." Could you want to share your email address or your company, or how do you want to do that?
Sure. If they just go to davidsolis.com, they can, on a website there, and then just follow some tabs, and then that'll get you. Again, I work with teachers, but I'll take a call from anyone.
Okay.
But if they go to moremoneyforteachers.com, they can enter in their information, give me their email address, phone number, and then there's a short video they can watch. And after they watch that video, they want more information, they can actually get on my calendar.
Okay.
And we can have a Zoom. We can do a Zoom call or just a phone call. Typically, the first call is only 20 minutes, 30 minutes, and we decide whether we're a match. And if we're a match, great, we'll proceed forward. And if we're not, that's okay. they'll
come back.
I'll still teach them something.
Yeah.
Yeah. So those are the best ways to get a hold of me.
That's awesome. Well, let's assume for a minute I am a prospect, because I really am.
Mm-hmm.
You know, share more about what you bring to the table around that. You know, when it comes to analyzing portfolios or these buckets of this wealth circle.
Okay. Well, you know, when it really gets down to it, there's only 4 questions that you need to know the answer to to see whether or not you're on track for retirement. So if I met and I say, okay, just show me what you're doing, Mark. And if let's say we don't change anything.
Okay.
Show me what you're doing. I will show you what rate of return you need to get on your investment. I will show you how much you need to be saving per month. And I'll show you how long you need to do that. In other words, if you told me, hey, I want to retire at 70, well, I'll look at the rate of return you need to get to do that, how much you need to save to do that. And we may have to adjust one of those 3 areas. A 4th variable is inflation, but we have no control over that.
Right.
But we do have control sometimes over rate of return.
And right now it's out of control, in my opinion. Inflation.
Yeah.
It's a little
crazy. Oftentimes when I meet with people and I show that and I say, look, here's how much you need to save if you want to do that, they're shocked.
Yeah.
Well, that's why I look at wealth transfers, because a lot of times they think, well, I can't afford to save that much.
Mm-hmm.
Right. If you're thinking about it coming out of your cash flow, it's probably hard.
Right.
But if we look at how you're spending your money in all these other areas and can make you more efficient and free up cash flow, now here's the cash flow to do it. Now,
makes sense.
The benefit of doing all these and answering these 4 questions, and I can show it to you both in numbers and in a picture, is let's say there's just no way we can do it. You know, we don't have enough time, don't have enough runway. Well, at least I'll show you what your retirement is going to look like so you can prepare for it and not get to it and just be sorely disappointed. You'll have an idea of maybe how you're going to need to cut back a little bit in expenses. Right. That's worst case scenario. Yeah. So that's another thing and that's a tool I have called Retirement Ready or Not. And that's one of the first things I do for people. We put in all your numbers into my software, Retirement Ready or Not, and we show you where you're at. I'll show you how long your money is going to last and tell you the year you're going to run out of it.
Mm. And of course, you got to speculate on how long you'll live too.
Yeah,
obviously.
Yeah. You know, well, and I have human life expectancy tables, and I usually take that. Again, these actuaries are pretty smart about figuring that out.
Yeah.
And I take that and I usually add 5 years to it just to give ourselves a
little runway.
Yeah. And the other thing that I really want to mention before we get off is long-term care.
Oh yeah.
If long-term care, if you don't have a plan for that in your retirement plan, your plan is not complete.
Yeah.
You got to think of that, because the statistics show it's like 50% of us at one time or another are going to need some long-term care.
Yeah. My mother, before she passed, she was 89 when she passed, and she was in some sort of long-term care for the last 7 or so years.
Wow. That's long. Typically it's, I don't know, 3 years at the most.
It's $6,000 a month or whatever it was. It drains you pretty fast.
Oh yeah.
And she had assets, but she didn't have any insurance around that. So that was a painful experience for us.
Yeah.
You know, in the other thing around life insurance, and this is a personal conversation, because I had prostate cancer when I was 53, you know, and I was able to get some term insurance, but not much, you know. And so I don't know if I'm too old to look at a permanent policy or not. I'd like to talk about that.
Yeah, I don't know. We can look at that. And there's companies out there that specialize in people with higher mortality risks.
Yeah. I've been clean for 10 years.
Yeah. Okay.
But of course, like you said, you want to maximize your life insurance death benefit based on your age and your health and things like that.
Right.
And I have no idea what that is.
Yeah.
I mean, I don't know.
Yeah. And the way to do that is you just, you know, you submit something to the insurance companies and kind of see what they offer.
And they tell us.
Yeah. You see what they offer you, and if you don't like them, you can shop around for another one.
It's kind of like the mortgage business. You know, well, how much can I borrow? I said, we'll find out. We'll submit it to the lender and they'll tell us, you know, it's $500,000 or $1 million or whatever it is, you know, so interesting. So what else can we discuss in the last couple of minutes real quick?
Well, for younger, let's say for younger prospects, younger clients, you know, that's where term insurance really plays a part. And what a lot of people may not understand is you can purchase term insurance to have that peace of mind. And then over the years, you slowly convert chunks of that into permanent insurance with cash value. Now, be careful.
Guaranteed?
Well, that's what I was going to say. Be careful, because the true value of a term policy comes in its conversion privilege. Can I convert it to a policy within all the portfolio of that company that I can design, or my agent can design for me? Or is it a product that they determine? You want access to their entire portfolio, that where your agent can design something for you that maximizes that cash value.
Okay.
So term definitely has its place. Young couples, starting a family.
Sure.
Get that human life value, taken care of, and then convert along the way.
Yeah, and I'm thinking about younger people who are even single, because two of my boys are in their 30s, but they're both single.
Yep.
And it seems like the younger people are staying single longer.
Yep.
And they're not thinking about it
Yep.
as an investment vehicle, but they really should.
Yep.
Because there's a lot of benefits to life insurance, and they're not paying attention.
Best time to buy it is when you don't need it, kind of like borrowing money.
Yeah.
You know?
Yeah, exactly.
Because all of a sudden, when life hits you in the face, and I need life insurance. Well, now it might be too late.
Yeah. Exactly.
When you realize your mortality.
Exactly.
Yeah.
Well, let's just wrap it up on a note around football. What do you see the UT doing this year, huh?
Gosh, I'd be super disappointed if they didn't make the top 12 and make the playoffs. The whole thing has changed with NIL and transfer portal. It's a different game.
It's a whole different game.
Yeah, but I still love it.
Good,
It's
good. I know you're a season ticket holder, so maybe I'll see you at the games this year. But I appreciate your time, Dave. It's really great to have you on the show, and I learned a lot. And we're going to catch up with you after this and talk about my deal.